All right, welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be here.
Today, we're diving into some recent tech earnings and trends. Got some interesting points on Apple, Microsoft, Meta, focusing on AI, supply chains, and how it's all shaken out.
Yeah, there's a lot happening beneath the surface of those earnings calls.
Absolutely. So our goal here is to, cut through the noise a bit, give you the key insights, what this actually means for these big players and, well, the whole tech landscape. Sort of the fast track to being in the know.
Exactly. We're looking beyond just the Q4 numbers. It's about the strategies, the shifts, the potential ripples.
Okay, so let's kick things off with Apple. Everyone's always watching them, right? There's this take from Mark Gurman suggesting we shouldn't get too caught up in just the past quarter. It's apparently more about their long game, especially, navigating the whole global trade thing, supply chains.
Right. And that's where it gets interesting. Apple's clearly making moves, adjusting the supply chain. Think about the shift towards India for manufacturing iPhones, specifically for the U.S. market.
Yeah, I saw that. It's not an overnight thing, though, is it?
No, definitely not. It's a long-term play. It signals they're actively trying to, diversify and maybe shield themselves a bit from potential tariff issues down the line. It's strategic.
And that puts a lot on Tim Cook's shoulders, doesn't it? He's got to be this, master of logistics, but also a diplomat.
Absolutely. Juggling those massive global operations and the political currents, especially between the U.S. and China, that's incredibly complex. His skills there are crucial.
He's known for operational excellence, historically. Apple's always been good at the bottom line. Margins and profit.
Exactly. They really know how to manage costs, even with complex global logistics. And interestingly, the growing services revenue, that could give them some breathing room.
How so?
Well, if services keep growing strongly, maybe they have a bit more flexibility on device pricing. If costs, say from tariffs, do go up significantly, it's a potential buffer.
Okay. But then there's the AI question. There's this perception, maybe, that Apple's kind of dropped the ball. Siri hasn't evolved as fast as some hoped, and their generative AI stuff seems, a bit slow off the mark.
That's definitely a narrative out there. But you also have to ask, what are consumers really prioritizing right now in a smartphone? Is it the absolute cutting-edge Gen AI, or is it still the hardware, the ecosystem, the reliability?
That's fair. Hardware is still king for many.
Right. And while the AI buzz is huge, the core phone experience matters.
But then you hear these whispers, right, about maybe integrating Google's Gemini.
That's generated some excitement.
It sort of fits Apple's pattern, doesn't it? They also aren't first in a market, but they aim to come in later with something really polished, really integrated, thinking like iPod, App Store.
That's a very good point. It's often about the execution and the user experience for them. Simplicity, marketing.
Yeah.
They nail that.
So this Apple Intelligence thing they're talking about, it's more about personal AI on the device.
Seems like it. Less about the huge general models like ChatGPT or Gemini, and more about AI that understands your context, your data, securely on your phone. That's a different angle.
Interesting. Okay, let's switch gears. Meta. It feels like all that money they poured into AI, it's actually starting to pay off, at least at the app level.
Yeah, the signs are there. Zuckerberg laid out 5 focus areas for AI, and they're reporting some real returns.
Like what?
Well, specifically, they're talking about AI improving their ad platform conversion rates by about 5%. That's significant.
Wow, okay.
And also boosting user engagement. Time spent on Instagram and Facebook reportedly up 6 to 7%, thanks to AI recommendations and features.
So the AI is actually, delivering tangible results for their core business.
It seems so. But a word of caution there. Meta has invested massively and effectively in AI, and their ad platform is incredibly resilient. You can't necessarily assume every company spending on AI will see those kinds of returns.
Good point. It's not a guaranteed win for everyone. And even for Meta, despite these positive numbers, tariffs are still a concern. They're talking about higher costs.
Exactly. They're careful with the language, avoiding maybe the direct word tariffs, but they're definitely flagging higher infrastructure hardware costs. That's coming from global suppliers. And trade negotiation uncertainty is part of that equation.
So their CapEx is going up partly because of that.
That seems to be a factor. It looks like 2 main reasons for the increased CapEx. One, the offensive push on AI because they are seeing returns. And 2, rising costs for the hardware itself. They're working on mitigation, but it's there.
And this compute need. It's not just for training the big foundational models, is it?
No, it's across the board. Marketing, ad development, running the platforms themselves. AI is becoming embedded everywhere, and they're aggressively deploying it. Better ads, better feeds, new stuff like Meta AI, the Ray-Ban glasses, WhatsApp business tools.
So you think other companies might see Meta's success and feel pressured to ramp up their own AI spending?
It's possible. If you see a competitor getting real results, it definitely puts the pressure on. Though, again, Meta's ad model is quite resilient compared to some others. But even they aren't immune if there's a really sharp economic downturn.
Right. Makes you wonder about Amazon, too, with rising prices maybe impacting e-commerce. Are they prioritizing margin or market share? Different strategies there.
That's another complex calculation they'll be making.
Okay, what about Microsoft? They seem to be just crushing it with cloud growth. Azure's on fire.
Absolutely. Really strong quarterly results, sales and profit up, largely driven by Azure.
And AI is a big part of that Azure story now.
A significant part. They explicitly called out a 16% AI contribution to Azure's growth. So it's clear evidence that those earlier AI investments are translating into real revenue gains.
So the demand is definitely there.
Oh, yeah. Demand for Azure, particularly the Gen AI services, is apparently exceeding supply, especially for things like NVIDIA GPUs. They can't get them fast enough.
And it's the big companies, the Global 2000, moving to the cloud that's really driving this.
That's a key driver.
Well,
that migration is still happening. And Microsoft is furiously trying to provision the next-gen AI infrastructure, building out data centers.
I heard something about time to power being a bottleneck.
Yeah, that can be a constraint. Just getting enough electricity and getting it connected quickly enough to power these massive new data centers is a real challenge.
But they expect spending on this to moderate a bit after the next year or so.
That's the guidance. Fiscal 26 CapEx should ease off from the highs of 24 and 25. They're building long-term assets here. These data center shells have like a 15-year lifespan. It's foundational investment.
Does Microsoft have an edge over, say, Google Cloud or AWS? Because they already have all those enterprise relationships.
That's widely seen as a major advantage.
Yeah.
Those deep existing relationships with businesses make it potentially easier to onboard them onto Azure and their AI offerings.
And Satya Nadella gets a lot of credit, right, for seeing this Gen AI shift early.
Definitely. His leadership is viewed as visionary in steering Microsoft through this AI transformation.
Right.
Plus, they have a scalable, internally developed AI stack, which helps.
Interesting little side note, Xbox prices are going up. Hardware and games. And they're pointing fingers at tariffs, too.
Yeah, saw that. Even gaming isn't immune, it seems.
But overall, the feeling is that cloud and Gen AI are so critical now. Businesses almost have to adopt them, even if the economy looks shaky.
It feels that way. It's becoming mission critical. The potential efficiency gains, the new capabilities, they're hard to ignore. And as the cost of using AI models and tokens comes down, which Microsoft is working on, it just makes adoption easier and broader.
So the risk is actually not migrating to Gen AI from an operating margin perspective.
That's increasingly the argument, yes. Falling behind could really hurt your competitiveness and efficiency down the road.
Okay, let's zoom out a bit. What about the broader market? Are VCs still pumping money into AI startups despite, everything?
It seems so. We saw examples like Encore Capital raising a new fund. Early-stage investment seems somewhat insulated from the immediate macro stuff like tariffs. There's still a strong belief in AI's long-term potential.
Fewer big IPOs. More M&A for exits.
That seems to be the trend lately, yeah. Mergers and acquisitions are a more common path for startups to exit right now than those landmark IPOs we saw a few years back.
And for those early investors, it's still about finding those founders with truly unique ideas. Companies opening up totally new markets like Postmates or Fitbit did back in the day.
Exactly. It's super competitive at that early stage. You need to spot the potential, the unique perspective before it becomes obvious to everyone else. Find the category creators.
Right. And lastly, there was a point about China's AI development and open source.
Yeah, the idea being that having open source models from trusted sources is really important globally. It ensures diverse perspectives aren't drowned out.
And it's less about the models themselves and more about the data and how it's used.
Precisely. The real differentiator, especially leveraging open source AI, could be the large, unique, proprietary data sets that companies possess. That's where the value gets unlocked. Open models plus unique data equals potential advantage.
So, wrapping this all up, it's a really complex picture, isn't it? Tech giants juggling huge AI bets, rethinking global supply chains, dealing with trade pressures.
Yeah, everyone's navigating it slightly differently. Apple's playing the long game on hardware and personalized AI. Meta's seeing direct returns on AI in its apps but faces cost pressures. Microsoft's riding the massive cloud and enterprise AI wave.
And AI is just everywhere. It's driving opportunity, but it's also driving up costs.
Mm-hmm.
It's central now.
Definitely no longer a side project. So maybe the final thought for you, the listener, is to consider which company's approach resonates most, whose strategy seems most likely to succeed in this pretty challenging environment, and what does that mean for the future of tech and how accessible it'll be.
Great point. Lots to think about. Well, thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.
Thanks, everyone.